Hi guys, another important, informative, and very revealing trading week is laying ahead of us, and that's next week. We got non-farm payrolls on Friday. We got a ton of other information in regards to central bank news. The Bank of Japan's interest rate decision is somehow due, as well as the FOMC committee checking on what goes, as well as the Bank of Canada. Let's start with the Canadian Central Bank. So they are not expected to cut rates. Instead, they are expected to remain at 2.75%. The Bank of Canada is likely also not making another move. Interest rates are one thing, but the inflation is obviously in Canada rising slightly, 2.8, 2.9%, now up towards 3.1%. So the question is how much more the newly added tariffs and the unfolding story in Canada in regards to the US is also going to drive inflation towards higher levels. That's at least for now why the Canadian Central Bank is likely not going to cut or adjust rates moving forward. Let's observe and check out the currency pair, the US dollar against the Canadian dollar. That's the weekly chart here. We see the market has been stabilizing at around an important level. Previously, the market was at a resistance area, and that resistance zone, which is also now where the 50 moving average caps the market from rising further. The US dollar obviously not gearing up some steam. Dollar index currently weakening somewhat. So the Canadian dollar might actually start to appreciate somehow further. And that's the importance we observe here, unless the high point here can be broken. That's the 139 zone, and the market hence might move higher. But the idea currently is that pretty much the support area, that zone, which is acting as a support, if that zone breaks, we might see a sudden fall in market motivation and a sudden fall in market momentum here of some sort. Obviously, kind of the outlook or any expectation in regards to what we hear from the Bank of Canada's interest rate decision and the following press conference might give us further insights and further and more clarity in regards to what we get here with the Bank of Canada's further rate motivation. Looking further beyond the line here, the upside momentum might actually start to kind of unfold again. We have seen that this week basically closed up at higher levels, and the break to the upside here might unleash obviously US dollar strength, or say driven by strength in the greenback. The market is potentially moving higher, and if we look into the dollar index, we can see that the market is not really giving us any clear indication, but what we observe here is that the market momentum seems to be kept based on these charts here, and that means that the market momentum in regards to the dollar index, everything in a way against the US dollar as an index measured. If the dollar index moves higher, the US dollar is gearing up some momentum. Euro dollar expected to fall, pound US dollar to fall, potentially dollar Japanese yen to rise, and vice versa. Again, the dollar against the Canadian dollar might also kind of rise further if this index here will not break lower. We could see that the momentum might be in favor of the US dollar. So let's observe and how it goes. We will see obviously next week that the long-term trend, and that's the expectation here, the long-term trend broke the support area. It broke the previous resistance, now support, and now the market might actually be on track to weaken further. If my glass ball is being asked, I would say the market is kept here, and the further weakness here just towards the 134 area, where the 50 moving average based on the monthly chart kicks in, is where I would see the market to proceed to. So downside motivation might be the current momentum, and the outlook here for next week obviously kind of giving us some clear indication in this news event. Furthermore, then on Wednesday, we have the funds rate. So the dollar against the Canadian dollar, which is why we are staying with this currency pair, is going to be interesting because the Federal Reserve is not expected to cut rates. And Jerome Powell would say, look, we got non-farm payrolls data coming up. Consumer prices have stabilized. Economic activity is pretty much solid for now. If we see the Friday's data now, that's a preview potentially moving on in favor as well. The central bank is likely not gonna act here against and or in favor of the greenback. Instead, the remaining 4.5% are seemingly what causes the market motivation to be well, kind of quite interesting. And as long as the central bank does not start to cut rates, current expectation that maybe in September we might see another rate cut, that would actually help to support the greenback somewhat. So that would be another argument for the US dollar against the Canadian dollar's currency pair to move higher. However, we got initially the Bank of Canada in the afternoon on Wednesday, and that might kind of propel the Canadian dollar's strength and could push the dollar CAD maybe initially lower, which then subsequently kind of an hour and a half or so later help the US dollar to basically gear up steam again, which then could push the US dollar against the Canadian dollar's currency pair back to the upside. It might be an interesting trading day as well, this Wednesday trading day next week, and it might furthermore also cause the equity markets to be quite responsive, because equities are obviously kind of on two important pillars. First of all, economic activity and corporate earnings, as well as corporate information. Second, obviously, the financial idea and money supply rate cuts, which is why currently the German, the DAX and other indices in the Eurozone, Euro stocks as well, just to mention a few, are moving higher since the European Central Bank, the ECB, has been cutting rates quite a bit, at least compared to the US. So that supported equity markets, European, German equity markets in comparison to their US counterparts. They are also obviously moving higher. However, if we see those figures, they would be interesting, and we'll debate in a minute as well on how and what might happen this coming week. S&P 500, as we see, has moved higher, and the market is extremely interesting because the upside momentum is still and remains open. However, after the strong break to lower levels when the market collapsed basically in April, all the way towards the previously resistance zone, we can't emphasize this more than enough here. The market then found support, right? Resistance on the left, support on the right. We have the 50 moving average kicking in. And by the way, guys, we've seen this countless times in the past, right? So this is the 50 is money. This zone, which had been tested several times here, tells us that there is quite some strong importance here. But the upside here in the S&P 500 might still continue. However, the interest rate decision here might also cause the market to basically celebrate some, say, setbacks here. Any retracements, any correction, which, by the way, bigger traders, investors alike, they expect, institutional as well as the smart money, expect that markets at some point will potentially correct a little bit. So caution might be a kind of the better way of trading the markets, as we've seen that the upside was kind of quite nicely pretending and moving markets to higher levels, and vice versa. Same story, or similarly rather, in the Nasdaq. The market momentum towards the upside here continues and seems to kind of drive the market with the positive demand as well. Then this next week we have quite a few other news events as well. Moving towards the Friday news, so we should also talk and debate on what the currencies are going to do, somehow moving further. But before we do that, we should take a look into the economic calendar, as obviously the Friday news event here this week with the non-farm payrolls are quite important here. Only 108,000 jobs are being expected. So the creation of these job figures are extremely low. Expectation is extremely low. Will the figure kick in? That could cause the US dollar to actually weaken as well. And that could help, furthermore, back to equities, could help the stock markets. A weaker reading in non-farm payrolls might support the Federal Reserve. Well, the interest rate decision is on Wednesday before the news event. But on Friday, we might still see that weaker figures might be a reason for the Federal Reserve to kind of cut rates as early as August, maybe potentially. So both of these news events combined are extremely interesting and important to observe this next week. So 108,000 jobs, any figure at around that level might just not move markets much. Say we have a reading below the 100K area. This could be somehow negative for equities, in one hand, but could also be positive depending on which side of the market is being expected the most. However, I remain with the Federal Reserve's statement and information. Weaker figures quite often had been positive for the non-farm payroll data release, which causes the stock market to subsequently rise in the near future. Furthermore, we could also check out currency pairs, and that's the pound against the US dollar. I said we still, and I said that before, I still am just secretly expecting the US dollar to gear up some steam, but at least after the current or longer lasting weakness of the greenback. But we need more confirmation. We need more support in for this market. Currently, the pound US dollar, or cable as the currency pair is referred to, is resting right on or at this important support area. Any break lower here, below the 134 area, it could support some further momentum in regards to the greenback, to the dollar, because now we are back to where we started earlier, basically this week, with the market showing us a totally nice turnaround candlestick pattern. And this pattern is exactly how we've seen in the past year. It could now be one of the reasons which is just pushing or pulling the pound US dollar back towards lower levels. So downside motivation might be the key takeaway here in this market, as at least the candlestick pattern currently confirms or shows, compared to the euro US dollar currency pair. So if I would buy the euro, or if I would like to sell the dollar, I would like to buy the euro dollar, at least expecting the market might move higher. And on the other hand, I would like to rather sell the pound US dollar here, as the market looks like set for further weakness in this market environment here. So we have two currency pairs, and both of them giving us different signals. And based on the euro US dollar, we talked about this basically also a couple of trading weeks ago, that the upside here is still kind of quite open, and it might just be a matter of time when the market breaks the upside here, with a break of the 118 area and level towards higher levels, because then we might see a quick move towards this next resistance zone here, the 122 or the 124 zone respectively. So upside in the euro and maybe a downside in the pound is at least the current expectation we see here, as the market trend or the market and charting patterns show us. Do we have other data this coming week? Yeah, we got a bit of data, CPI data, basically out of Australia. They are not expected to move markets quite a bit, but in general, we should also debate those and talk what they might offer here. 2.1%, no deviation here. The quarterly figure is slightly weaker. That's not a big story here, but the Australian central bank obviously and further motivation of the central bank had recently helped the Aussie to basically move or stabilize at current levels. However, the market here so far looks like closing at higher levels, but still looks like closing not beyond an important resistance zone, and that's the zone here, which we see the 166 area, sorry, the 0.66 area. If that area can break, the market might move towards way higher levels, and that's again a strong risk sentiment we see. Strong Australian dollar or a strong Aussie would support the equity market, because that's the risk on currency pair if we are looking at the Aussie against the US dollar, which then could ignite also further moves in the equity side of things here, as we debated just before. So CPI data, stronger reading. Obviously, if we see a higher reading here, which I wouldn't be wondering that this might be the case. Actually, a higher reading in the consumer price index might obviously support the Aussie US dollar currency pair, which in the end obviously would support equity markets potentially to move back to higher levels. What else do we have this week? JOLTS job openings, as usual, interesting only if they deviate sharply. We have also the non-farm ADP non-farm employment change, and this data has been quite different from the non-farm payroll data. Usually it's been seen as somewhat of a preview. However, the data works differently, and hence it might not give us a big preview in regards to the NFP data, which is what we like to focus on as well. Bank of Japan is not expected to offer us any change. Instead, we might still see that the dollar against the Japanese yen is just erratically, in our view at least, moving to the sideways and maybe higher market price range. Another reason for maybe some dollar momentum, positive dollar momentum against the Japanese yen here. So this dollar-JPY currency pair has not kind of started to depreciate. We didn't see the market breaking lower. And with that, we might rather say the market could be on track to move back to the upside resistance area, right? So any push here as a target here beyond to the upside is at least the current expectation, unless the market weakens below the low point and below the strong support area, which is currently not happening. So upside motivation in this market might still kind of be based on the continuation pattern, the big thing here, and any sort of similar momentum in regards to the interest rate out of Japan is what might drive this market as well. Furthermore, and one of the last big topics so far is clearly the crypto space, right? Cryptos have performed somewhat kind of quite interesting, at least. Let's start with the most interesting one. Ethereum. ETH has moved back to higher levels again, and we are about to close the high point here. I would say there is not much needed in order to kind of break the 4,000, 3,900 zone. The market momentum quite intact. Thereafter, the market might push straight, maybe, I might say at least, towards the 4,600, if not even beyond price range. Yeah, so 2 weeks ago, the market moved strongly to the upside. Now we are in a bit of a waiting pattern. But if the market towards Sunday closes at this higher level, we could see that next week the market might actually get and push back to higher prices as well. Bitcoin is trading steady in a sideways pattern. We see some ideas that the altcoin season, basically when the Bitcoin dominance kind of is fading and more market momentum, more buying support, more buying pressure moves towards the altcoins, those are expected to move even higher. Bitcoin remains stable and positive. Any correction as well might be used as an entry to the upside. Looking beyond the Ethereum market, here we see that XRP Ripple is trading in sideways pattern. It had stopped falling actually at around the important 310 or 3 US dollar level, since the market kind of corrected but stopped and starts to kind of push back to higher levels right now. We could see quickly that also next week might ignite XRP towards positive levels. Well, XRP, we've seen it quite a few times in the past, doesn't necessarily need any positive news in order to kind of run higher. Sometimes the market is just following the overall trend, and since cryptos have remained in a positive motivation, we see this is gonna unfold even further. The latter one here is Solana, which is also positively acting right now. We might be a bit too early to see, like, this would be the head and shoulders pattern, left shoulder, head, and the right shoulder, where a break of the neckline here would unleash downside momentum. We are kind of a bit far off that situation because currently the market starts to appreciate again somehow further. Based on the long-term monthly chart, it's still of an unclear picture, but you see the left shoulder, the head, and the right shoulder, which could push this market back to the downside. Short term, a bit too early. We have to see how the long-term, the weekly chart at least finishes this week to then determine the future trend. And the other ones, Dogecoin, I don't know, correcting as well. Somehow still looks not overly bad. Cardano as well starts to appreciate again further. That's a cool movement here, which has been ongoing so far actually for the day. So we see that there is an upside potentially at least expected, and Cardano might as well follow up with the other big tokens. Recently, we said as well in silver, we sold another call option, strike 39, and that's due to expire basically next week. So far, the market had done what we expected it to do, and silver has been capped here at below the 39, roughly $1 lower, 38 point whatever price zone. If this kind of really pushes the market back to the downside, we would obviously be happy. Exactly on Friday, the market's correction helped our trade so far nicely. Too early to say, but it built up a nice bearish candlestick pattern. Any break of these levels here, and we just need the price not to move at all. Since the strike is 39, we collected the premium as usual up front. We didn't need to hedge this trade or the market, at least for now. It looks like it's kind of really ready to basically break lower as well. So the recent 2 trades so far, it's not over yet, were supportive here, helping our account as well, and regaining some further profit here for these and from these markets. On the other hand, we can also look at the oops, that's wrong. The gold price, gold also started to depreciate again last week. So again, we are back towards these certain signs on the horizon that the US dollar might actually support further weakness in gold, in silver, and as well in the oil market. Because in general, the markets, they look kind of actually quite weak so far, right? So gold printed a nice bearish candlestick pattern. We see that the oil market as well is following up with further weakness here and pushing maybe oil prices back to the lower end here. 67.50 zone had not been broken to the upside. Instead, the market weakens further, and more downside motivation clearly also might be seen by the break of the 50 moving average to the downside. Plus, we still remain, based on the weekly chart, back to below or below this price pattern, the 50 moving average. Guys, that's my take so far for this week. I wish you happy trading so far. Please don't forget to leave your comments under the video. Don't forget to subscribe to our channel as well as usual, and give you further updates here in the next week trading. Have a good one, cheerio, and all the best. Bye.